Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And this is the video that so many of you asked for. This is our follow-up video to that exciting cost segregation, bonus depreciation. How much money is Michael going to save on taxes? Hey, David, how you doing, man?
I'm doing great. How about you?
I'm doing very, very well. So
I am loving talking to all of your friends through one rental at a time.
Yeah, one rental at a time is a community of doers. They focus, they do the work. I've had other people come on, and the activity that people get surprises them. So I'm very happy that is the case for you.
I'm having a ball.
So one of the things,
great folks.
Oh yeah, they're awesome. So one of the things that makes my channel unique is I'm not a talker, I'm a doer, right? I started in 2002, one rental at a time, retired, all of that. But I always take my experts and I run them through the process. So what did I do last week after our episode with Omar? I sent you my latest acquisition. So what I'm going to do is we are going to walk through my estimate. We're going to give them the process that happened ahead of time. We're going to talk about where we're at. We're going to talk about what's next, because I want everybody to realize that I am going through this with you as well. Does that make sense?
Makes sense to me.
All right, so let's set this up. So we had this introduction to cost segregation and bonus depreciation. It was very exciting. I am a real estate professional, right? I don't have a day job, right? So all I do is real estate. So I qualify for this, much like Omar, who brought it to us last week. So I was excited, but I've been doing this a long time, so I wanted to test you. So on my channel, as people will know, my most recent acquisition was a duplex. This duplex is right on the border because you said in our interview, hey, it's got to be above 200 grand, right? It was kind of the threshold.
150 grand is worth taking a look at, but remember that the land value doesn't count.
Correct.
So it has to be 150,000 and up, not including the land.
That's, yeah, again, so for folks, if you have a $200,000 building, but your land's worth 50, you're really only talking about 150 grand with depreciation. Land doesn't depreciate. So that's very important. So I always like to, I just sent my latest acquisition. It was a 2-house combo on one lot. Purchase price was 180. I actually sent you the closing statement, and it, a couple of questions you asked: address, closing date, or no, when did it go in service? This was a turnkey purchase. So it was service day one. So no make ready, no repairs, no capital expenditures. And what I want to do now is, so I sent that to you on Wednesday, and I got what people are going to look at Friday. So it was like a 48-hour turnaround. So pretty cool. But let's show them what you gave me, and we will just walk through it.
Sure.
So hopefully you can see it now, because this is your.
I can see it.
So basically, folks, the first thing that's going to happen is you're going to get an estimate, because you're going to basically figure out, is this worth it to you? So again, you get this nice PDF. It's all pretty formatted, all of that. We will just scroll down. Gives you the history.
And I will walk through that estimate with them, just so they know what the numbers mean.
Yeah, because you'll set up, that's a good point. You'll set up a follow-up call, a 10 or 15-minute call with them. So that's a very good point. I did forget that. So thank you. You give them the history of what it is. You give them some, some samples, all of that. Everybody's going to be like me, is like, okay, get done with the marketing. I don't care. That's what people are going to say. But they'll also probably be like me, is after our phone call, they'll go back and read this stuff, which is what I did. So pretty cool. Okay, so we just keep going, and then we get to my scenario. So let's walk people through this really quick. I'm going to actually tell you what I took from this, and you let me know how close I am.
Okay.
So first and foremost, my purchase was 188. We did not know the assessed land value, so I think we just assumed 20 or 25% would be my guess.
We assume 20 if we don't know.
Yeah,
it may be more or less than that in the final.
I own a lot. Yeah, I own. It's 20% is a great assumption. So folks, what that means is he took my purchase price of 188 times 20%, roughly 36 grand, subtracted that off the purchase price. So the structure or building cost in this case is 150, or I'm sorry, yeah, 150, 400. Is that correct?
Right.
Date of service was the day I acquired it, because I was earning rent day one. This is important. This is important. I always say it 3 times when this is important. The normal 27.5% appreciation, which I normally would have gotten from my CPA, is a boring 1596.
And that's each year for the first 27 and a half years that you own that property.
Yeah, that's no fun. That's no fun. So, okay. So then there's the alternative method. And this again is because of the Jobs Act. It basically allows you, as you shared with us last week, anything that was it 5 years, 7 year, 15 years could all be front loaded into that first year.
Right.
Okay, awesome. And then that first year is going to be 2021, which is the day of or the year of in service. And then this is important. This again, people need to realize this is not a tax credit. This is a tax deduction.
Correct.
Which is, again, as an accountant, very important. So again, we will get to the math, the specifics in a moment, but I want you to see this number here, 32,737. That is essentially what will go against my income, right? Let's say I make 100 grand.
Actually, that's the amount that we're going to increase it.
Oh,
The
increase
amount
it.
that'll go against your income is 34,333.
Because I add the 1596.
Right.
Look at you. Awesome. All right. So, okay. So 34 grand. Thank you. And then, so that's a credit. So really what that means to my, like, again, I always talk about cash. It is $12,113 in cash. I won't have to send to the IRS.
Exactly.
See, I like this.
Well, this is a fun thing.
Yeah. $12,000 is like real money. Awesome. Okay. And then this is a pretty graph basically saying, do you want to depreciate it slowly? That's the whole blue line. Or do you want a big lump sum year one? And then, oh, by the way, ongoing years, I'm going to get less because you've just front loaded a bunch of stuff. That's what that pretty chart says. Okay. And then it goes into all the gory math. Anything you want to say about this?
Yeah, the most important math that you need to know is the study fees and then the after-tax study fees, which are up at the top right corner.
Okay.
So this study would cost you
$2,200.
$2,200, which
Yep.
is also tax deductible.
For sure.
So the net cost to you is going to be, I can't read it. It's too small.
$1,386.
$1,386 to get all of that extra tax deduction this year.
So basically, I'm going to spend $1,386 in cash. I always talk cash, and I'm going to get back whatever it was before, 12 something.
Yeah.
12 something. So again, for me, this makes sense. But I do want people watching this to realize I can be called a real estate professional. Our third episode today, we'll talk about a real estate professional in more detail. But David, if we go back to Mike Zuber, a la 2015, where he was a high paid tech worker, I wouldn't be able to take all of this, right? I would, again, it would go against my passive income, but then it would not go against my active income.
Correct. It would only apply to your rental income,
correct,
which is considered passive. So you can still get it all.
Mm-hmm.
You may not be able to take it all the first year because it depends on how much passive income you have.
Correct.
But the deductions will only reduce your passive income. But then if it creates a passive loss for you, you can carry it forward into
correct,
future years.
Yeah. Yeah.
As a real estate professional,
mm-hmm,
this
yeah,
can go against your total income.
Yes.
Which is even better.
Well, yeah. Let's just say Omar is very excited, and we'll just leave it at that because Omar is killing it. Yeah. So then we go back and we kind of close this out. So let's talk about the process from here.
Okay.
So I send you the address. 48 hours later, we get a report. I say up or down. I say, let's go. I have to give you my credit card information, which we will do off recording. And then what happens from there? Once I paid the $2,200, what happens next, David?
Well, before you pay me the $2,200,
mm-hmm,
you need to send me back this engagement letter, which is pages 8 and 9 of the document.
Yeah. And I have that right here.
The first page, it's what's on the screen right now, is page 8.
Okay.
All you have to do is initial that page and
okay,
fill out the next page, which is just simple information.
Okay.
Return that to me with your credit card information. Once
okay,
that happens,
mm-hmm,
and I submit that, you're assigned a coordinator from CSSI who
okay,
will work with me on getting the study done for you. I just sent Omar an email this morning that I had gotten from his coordinator listing the information that we need to complete the study
okay,
for each of his properties. And we're doing a bunch of them.
Yeah. So a couple of quick questions I got that I thought were fair is do you need to get into my properties? Will one of the things be coordinating internal inspections, for example?
It's not an internal inspection, but we do require a site visit. So
Okay,
we'll actually come and take some pictures and take some measurements to submit back to our engineers.
perfect.
Doesn't take long, but
But yeah, I would, frankly, I would hope this, right? Because frankly, this is involving the IRS. So I would hope there's a full audit trail with pictures and all of that. So I am very pleased to hear that.
well, all the final reports that we do include all of those pictures,
I'm sure.
for backup information and all that kind of stuff. So
Very cool. So, okay. So again, you give them this report, page 8, I initial, which is down here, page 9, I sign. And then we do, we basically pay for it. And then you will be, in my case, coordinating with my property manager in any of the other kind of questions. So,
correct. Once we receive the documentation back that we need
Mhm.
and the site visit pictures,
Mhm.
it's a 6 to 8 week process to get the completed study done.
Okay.
You don't have to have the study done by the end of the year. That's kind of a misnomer that a lot of
Yeah.
people think, wow, we're in a rush. We have to have it done by the end of the year. You
Nope.
can't get it done by the end of the year.
Yeah.
You need to get it done before you file your taxes, which if
Bingo.
it's an LLC is in March.
Mhm.
If it's personal, it's in April.
Correct.
If you file an extension, then we move on
Yeah.
further.
Yeah, that's a big deal. One of the things I would say is the property needs to be purchased this year, mean closed. Does it need to be put in service this year?
It needs to be placed in service this year because
I figured.
anything that you purchase but you don't place into service, you're not going to depreciate until it's
Because you don't have the
available for
income
rent.
yet. It's the matching.
Right.
Yeah, matching rules. Lovely accounting rules. So, and then again, 6 to 8 weeks after all of that. And again, it's just and then what will I like? What's the report? Is it like a 30 or 40 page PDF or what?
It's longer than that. I think it's probably about 40 pages
Okay.
or so.
And then what do I send my accountant? Is there a file or something?
In between times, I will be working probably with your accountant.
Okay.
And so I will go ahead and send the reports and everything to you as well as to your accountant.
Perfect.
So there's not a whole lot you have to do. Now,
Oh, I love that.
if your property was purchased before the current tax year,
Mhm.
Your tax professional is going to be required to file a form called a Form 3115, which is, from what the CPAs all tell me, a major pain to do.
Mhm. Yeah.
So to save them a little bit of time and money and to make sure that they don't have to charge you for doing this, we'll fill out the 3115 form for them at no additional charge. All they have to do is sign it.
Very cool.
So we were going to make it as easy as possible for your tax pro to
Mhm.
apply the cost segregation study to your taxes.
Very cool. Well, if folks want to be a part of this, I know a bunch of One Rental at a Time have already reached out. How do you want them to reach out to you to start the conversation or communication? How do you want that to happen?
They can reach out to me by text
Okay.
if they like. The number would be 770-367-8091. Or they can reach out to me by email. And email is david.wiener, but remember it's WIENER
Mhm.
at costsegregationservices.com.
Very cool. Thank you very much, David. This is a lot of fun, and I will get you the information today because I am moving forward.
All right, let's
Thank you.
go.
Yep.